Equity News on Equity Access, your daily insight of stock market developments and of developments in the Zimbabwean economy. A fantastic evening it is to you viewers. Thank you for joining us as we broadcast from our Hampton studios in Harare. I'm Ibn Nabunda. Let's go. President Edi Mnangagwa officially opened the mining Indaba in Victoria Falls and says government is committed toward formalizing small-scale mining, which he says is imperative in driving the Zimbabwean economy forward. Also speaking at the mining Indaba is the Energy and Power Development Minister Advocate Fortune Chassis, who said that mining firms can enter into foreign currency payments arrangements with ZESA on a back-to-back arrangement with regional utilities to enable the power utility to secure more imports. Now, of note is an interesting statistic here, which looks at what is played out with regards to the figures. Now, here the minister says that Zimbabwe says that miners in Zimbabwe can now engage in forex arrangements with ZESA. But if you look at the stats here, you'd realize that what we are actually facing goes beyond the water dam levels at Kariba, but rather has much to do with the forex payments in that regard. This is what Zimbabwe has spent on imports of power between 2017, 2018, moving through to 2019. In 2017, average imports was $16.2 million per month. 2018, it's $17.6 million per month. Now in 2019, there has been that sharp decline there, which could be a reasonable explanation as to what it is that is actually affecting our power supplies, and not necessarily an issue of low dam levels at Kariba or aging equipment in Rwanda, because we've had low power levels, we've had low dam levels at Kariba as well as aging equipment over the past 2 years, but we have not actually seen them affecting what we have with regards to our power. So an interesting development in that regard. As we make progress, our Greek value chain concludes the acquisition of a 51% stake in David Whitehead Textiles for $5.4 million, paving the way for the long-awaited resuscitation of the fabric maker. The 8-year-long hunt for an investor at David Whitehead has seen this culminating into a fruitful deal. Also of note is the fact that the corporation continues to seek for further engagement with investors. At the sidelines of the mining Indaba at Victoria Falls, Zimplats has issued a statement that they have invested over $2 billion in the Great Dike. Now, this is a look at how the corporation has performed over the past few years, from December of 2017 right up to December of 2018. You see there a jump of $64 million in profit after tax, as well as revenue of $153 million. Now, of note is the fact that the corporation accounts for 60% of what Zimbabwe produces. Interesting fact as well is the position that Zimbabwe holds in terms of global platinum production. Zimbabwe comes number 3 after Russia as well as South Africa. South Africa in first place, Russia second, Zimbabwe comes in third. Now this is what Zimbabwe has produced over the past few years, from, of course, this is 2005 where we produced 155,000 ounces, 2012 340,000 ounces, moving right up to 2016 where we hit a record high of 490,000 ounces of platinum. Now 2018 we're at 470,000 ounces. Now this is the production for the last quarter to prove the stats that South Africa is accounting for 74% of the global production, Russia accounting for 9%, Zimbabwe at 8%. But at this point, it is not exactly known how much Zimbabwe has, but there is potential to actually increase Zimbabwe's output, hence the $2 billion investment that Zimplats has actually put onto the table. Getback's microfinance raises $5 million RTGS dollars through a bond issue. Dairibord is bullish despite a harsh macroeconomic setup. In a trading update this afternoon, Managing Director Anthony Mandiwanza said that water and electricity shortages were affecting the company's production. Despite the challenges, he maintained that the firm was operating positively. In the first 5 months of the year, raw milk intake mounted 21%, while volume scaled 8% in terms of the volume sold. Dairibord has been able to reduce forex liabilities from $4 million in December to just $1.9 million in the first 5 months of the year. Mandiwanza said they were targeting forex revenues of $2.6 million by June 30 against a prior year performance of $0.6 million. Now let's just get into the stats to look at the previous performance of Dairibord. Now, in 2014, they reported revenue of $99 million as well as profit after tax of $0.6 million. 2016, a net loss position of $5.45 million against revenue of $93.42 million. There has been profit after tax in 2018 of $5.78 million against revenue of $126 meeting. Let's have a look.
I believe that the introduction of the interbank rate was a welcome development in order to assist both the traders of foreign currency and those in search of foreign currency to discover a credible marketing price. The supply recently, we are beginning to feel significant challenges around supply of water, electricity, erratic supply of electricity disrupting our operations. And of course, fuel, notwithstanding its negative impact. But the overall performance to end of May, today is the end of May, we believe that in spite of the headwinds that we face, your company's performance remains relatively better than it was the same period last year. In particular, raw milk intake growth, currently we are now taking up in about 41% of total intake in the country. We're particularly pleased with some of our anchor producers who have continued to invest in upgrading their production capacities at farm level. The raw milk for the period under review, 21% growth compared to last year, same period. Volume sales, they are 8% above the same period last year. The selling prices, we continue to adjust, particularly in line with the development on the market, inflation, exchange rate, input cost pressures. But of course, 95%. I think what is important is to take note of that figure that says same period last year compared to what it is now in US dollar terms. In US dollar terms, we are 62 cents per liter, which is about 52% down in US dollar terms compared to the same period last year. The revenue growth is driven mainly by volume, product mix performance, and indeed, of course, the price. We're currently sitting at about 125%. Sales volumes, we think by end of June, we'll still have a positive growth of about 6%. And of course, the period, again, we are moving into June, is that period where most of our products are vulnerable because of the weather conditions. The foreign currency, we believe, will maintain the momentum that we have started, and therefore we see 2.6 million compared to 2.6 the same period last year.
Now, this concludes our evening news bulletin. Up next is a look at the stock markets. Please stay tuned.
I think what I'm particularly interested in is trying to look at stats on a more elaborate scale. When you look at the losses today, it's now a two-day loss. I mean, it's adding on to yesterday's loss, but we have had a very good run for the week, up almost 20%. And if you look at the YTD figure there, it's showing pretty well that much of the gains that we are enjoying on a year-to-date level have come from what we have gained just in under this past week. But what's significant about the past week is what has happened on the interbank market. We saw more liberalization coming, and the Arabs are promising to inject more capital into that market. But what we have seen is a drastic loss in terms of RTGS dollar. I think it came off by more than 50% over the past few sessions alone, and so much of the gain on the stock market has really been driven by what has been happening in terms of the interbank market. But now, I mean, if you have gained that much in a very small period of time, then definitely you're bound to take profits as well. And this is what we are now seeing emerging, a trend where investors who have gained that much are now obviously taking losses. And I mean, you're also they're being cautious as well. Why? Because if the market, if there's been an injection of about 500 million, as what I mean, if we are to take what Arabizet is saying to be true, then it means that obviously the rate might not go as far up as 10 or so. So they're obviously being cautiously, they're investing their monies cautiously. So I think that's what defines the rate for me.
Okay. I suppose, yes, the week was very good. But prior to the losses from yesterday, we did have about a 30-day run, and it seems as if on our monthly gains, we do have one of the most impressive gains on a monthly basis. One of which is up 78%.
Yeah. So this basically defines gains on a monthly basis, and this is the third largest gain since 2009. I think on a monthly basis we have not seen such a gain. In fact, it's only here, which is September of 2017, when we gained 78% in a single month. And then getting into 2018, there's a month just before the prices that's around October thereabout. That's when we saw this also this big jump of slightly above 45%. But then it's now replicating again, a gain of 40.9% in just the, in May. And so obviously it shows investors trying to hedge their flows against the depleting dollar.
Yeah, I guess it is something of such sort, because also if we look at it on a quarter basis from 2013, it's a very impressive number that we are at, even if we have come off that much in the past 2 days. Now, just to move on.
So I think that figure as well, it defines. That's the highest point we have reached since 2009.
Okay.
We are sitting at 628.
Yes.
We have never done that in all the past years. We're coming from bases which are quite low. So 628 in terms of the industrial index. That's the highest point in terms of stocks. But this also speaks to how we have emerged from being a dollar, a purely USD valued ZSC, to now to levels where we are now valuing our stock market in terms of RTGS dollar. So obviously that changes everything as well.
All right, just to have a small highlight on our week-to-date gains. They have been trimmed down to about 13.73% on the all-share index.
I think it's now because of the impact of these past 2 days.
Yes, exactly. But the mining's index has been rising for the past 3 sessions. It has now extended that gain to about 17.69, while the top 10 index, which is the heavy hitter at the current moment, has trimmed it down to about 14.89%, while the industrials is just below 14%. Now, if you just look at our rises and fallers for the day, we had about 20 counters that were in the positive, 6 were in the negative. Star Africa, they are a part of Zimbabwe Association, Sugar Association. They did just give us a statement today in the press where they mentioned that they do have the capacity to meet the demand, and only because of the major huge actually major jumps within demand did cause for some kind of artificial supply deficiencies. Where do you think South Africa is going? Currently, they do have a PE of around about 98. They're about, mainly because they according to their half-year results, they have a very low number in terms of their profit after tax, around about 500,000 there. Yet the industrial average is around about 21 in terms of PE, and their price is pretty much where are they going by the time they release their full-year results? Do they
Yeah, I
look
think
like they're
this
going to
is
have
a,
a
this
very
is a
good time?
company which has got a lot of potential. They're emerging from a period where obviously their plants, they had to shut down 2 of their plants. In fact, Harare was operating only at minimal capacity up until 2014 when one of their top shareholders decided to put in money and redeem the plant, the Harare plant. But lately their numbers have been growing on a year-to-year basis, double-digit growth in terms of volumes. But I think the statement also comes at an opportune time. If you're telling the market that there's been a demand shock over the past few weeks, we saw people buying beyond their scale. In fact, you're trying to say they were buying my product. So in a way, you're speaking to how volumes have also emerged, or they've also increased over the past few. I mean, it's also it's good for volume speculator, people who want to project how volumes have been. And also when you look at the price, I mean, the price coming from around 250 thereabout is now over $5. Of course, there's a lot of inflation issues which affect costs as well, but it speaks to a growth in the top line. So I think this jump, I mean, it speaks to what's happening broadly on the stock market. It speaks to people trying to find those counters which were not correctly valued, and obviously these penny stocks are also benefiting in that.
Yeah, I suppose the gain is pretty much justified in that area, because I mean, yes, their half-year period was actually one of their best in quite some time. They had been taking in some losses for quite some time now, and then they actually did mention that the demand spike also within that last quarter of 2018 did really spare them in terms of how they performed over that past period. So yes, I think it's a counter that has really jumped because of some kind of statement that has come from that association in terms of how they can actually benefit for the investors. Moving on, for the trailing that counter was Zimmer Holdings, Willdale, and FBC, which is a banking stock. Any insights in terms of banking stocks there?
So basically, CBZ has been one of those banks that has been undervalued by the market, but I think the market has been considering the fact that there's been a lot of government influence in terms of how loans were being distributed, and most of the exposure was actually attributed. It was alleged that it's attributed to obviously those that are within the the government, and obviously most of them might not be able to pay back. As a way of culture, so the market had to grossly discount their stock price, but they trimmed their loan book by about half, from about 800 million to about 400 million, and that's a huge knock. And obviously it should also speak to increased quality, because if you're trimming your loan book, it means somehow you're actually improving your quality as well. So obviously they've also gained in terms of share price. FBC, I think, at a price of 50, I feel that it's now way overvalued, but it's benefiting from brand strength. It's also, its numbers are looking good as well. It's emerging to be one of those top contenders among the best performing banks in Zimbabwe.
All right. On the other end of the yardstick, FML did come off 5.88, emerging as the worst performing counter today. PPC, Cassava, and Econet, they did enjoy a very good run of about 5 to 7 trading days, sessions consecutive. Much to do with a lot of anticipation as to their financial results coming out as of today. But they did mention that they're going to have to postpone the release of the results.
But I would want to believe, of course, the issue to do with results, I don't think it has an impact in terms of these numbers. Why? Because their year end is February. So they were supposed to be given, you're supposed to be given 3 months after that to report. So all of the counters that are on the ZSC were given an extension of 1 more month.
Okay.
So for those which were supposed to report by March, they were given an extension into April. Yes. And so for Cassava and Econet as well, who had a February year end, they obviously have to enjoy the same the same extension. So I don't think there's anything amiss in terms of the extension of their financials. But I think what has driven the past the accumulation in terms of share price over the past few sessions is mainly to do with the fact that there are big counters on the market. Okay. Each have got a market cap of at least 5 billion, and obviously all the investors who are looking for comfort, they're definitely going into those counters. If you go back to those previous charts, you'll see that much of the top 10 gains were driven by these two counters, because they are the counters which together with Delta, they definitely give comfort to investors because of the fact that they are value counters. They are beyond growth stocks. They are at a level where their business model is not easily shaken by weaknesses in the economy. So that's why they've been running the way they did in the past week. So obviously these investors just trying to take profits after a very solid run.
Yeah, it was a very solid run. Prior to their drop in share price, they did gain about 74% each on a month-to-date basis. Now, the interbank market versus our parallel market day. Parallel market did close pretty much firm at a 7.4 rate there, while the old mutual implied rate has run off to about 9.7, while the interbank has weakened again to about 5.26 there. Do we see a continued trend? I mean, yes, right now on a month-to-date basis, the interbank is down 61%. From the beginning of May up to now, 61% weaker. Where are we going to continue seeing the same rate of decline in terms of that market? Because
I think there's still a huge gap that needs to be cleared. We were told last week that the governor said 40 million moved in the market within a period of about 5 to 6 days. And when you divide that over a single session, it's just about 8 million thereabout. And even that collective amount, and looking at the in terms of our backlog, in terms of our foreign payments, be it dividends, debts, payments of raw materials and so forth, that bill is upward of 600 million. So there's definitely a huge queue that's out there. So if you had to say, if you had to say with the current level of injection at just below 100 million, and where there's been an accumulating forex demand queue, over the past 2 years, I don't think that gap can be cleared. So obviously demand is gonna be high, where supply is coming in drips. So you keep seeing the price going up until a level where we have achieved a balance between demand and supply. Then we might see stabilization of the exchange rate. But I think going forward, what's important is that after there has been a clearance, which point we don't know, because if the RBZ was not putting a cap in terms of how much the interbank rate could go, we could see a sharp spike in the price. But I would believe that at some point it has to come off, and obviously levels of just about 6 and below in terms of the USD. I think those levels are where the market might stabilize.
All right, thank you. Respect. I suppose for them to continue borrowing, I don't know whether they the jump from a $2 million per day trading session to about 8 million there is a result of the 500 million, but then that 500 million was a reason of borrowing. Yeah,
sure. But I think the IMF as well, in their statement which they published today, they highlighted that Zimbabwe indeed borrowed against certain minerals. Obviously, the only borrowing that has been touted over the past few days, it has been that 500 million. So it might be there. It might actually be in the market right away. But these are drawdowns. You take a few dollars at a given time. So it remains to be seen whether it helps push the market in the right direction. But what's critical is to at least make the people who generate forex on a day-to-day appreciate this kind of market, the Interbank market, and that's the missing link at the moment. We need those exporters to have trust in the system, and that's the missing link right now.
All right. Thank you, Respect. From me, Respect, and the technical team, Bingo and Tanaka, thank you. Good night. Please don't forget to actually like, follow, and subscribe to our YouTube, Twitter, and Facebook accounts at Equity Access. Good evening.